Hello, good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. Welcome to 202 edition of Investdata Trade Academy live with Ambrose. Where it was seen that the market today at the global stage is opening on a positive note across the major markets of the world. I can see that US market, the three major indicators are in green at this hour, and while that of European market are also extending the green position we saw yesterday at this hour too. They are still in green, just stable as we speak now. While Asia market, I've said it, that market will continue to oscillate, but as we speak now, the market is mixed. While Africa also is mixed, but the good thing that Asia market, most of the markets are what are in green and also bullish. But I'll tell you that Africa market are mixed. But down here in Nigeria, NGS is in green. As a result of yes, recent rate hike. It was a watch on the newspaper that the news of a rate hike will be a bad news for the equity market, which we all agree. But I told them earlier that we need to wait to see market reaction for 2 days, Wednesday and today. And consider yesterday that market didn't react most to the hike in rate, and also because also seeing a disconnection between the NPR that was hiked by 100 basis points to 17.5 with the last option that just that was concluded yesterday, that was saw that most of the yield and rate within the tenors were also on a decline. 10 of them was decline, and this making the 5 consecutive period was seen that the primary market option for the nation treasury bill has been on a decline, and that also should tell investors or market players what to do now. Ideally, portfolio reshuffling will continue or rebalancing will continue. But with this latest development, since we have seen continuing for 5 months, what does that stand for? What does that signal? Especially in any season. Those I said one of the program yesterday that time frame is very, very important. That's why in equity investment or most of the assets we trade is price and time. You need to look at what the time, what is the return, how long it take. If that is what we're going to look at this season, you need to know that equity remain more attractive because of what we're entering the peak of any season in our market here down in Nigeria. For me, that's why I said investors have called me since yesterday night and I say, I told you just a side picture, let's see what is going to work. Let's see how far I'm going to move to the equity market. This morning the market is in green. Yeah, back to to the foreign market, because I tell you there is a top to bottom. I mean to the what to look at the market from the mature from the global center world to our local market. As we speak now, all eyes in mature market are in what are in looking forward to see the GDP figure from US today, and that GDP figure is very, very important to most of the investors across the globe to see that the fear of recession, this figure also signal where we are going, and for that, all eyes are on that. And don't forget also other climate also expect to see some data again. But the good thing again is that market will always react to when a company release a bad result, a good result. You can see that as all eyes on this, expected economic data. Also, the corporate number that also hit in the market so far, there are also mixed reactions. Some of them are came in below market expectation, while some also beat expectation. As you know that when a company surprise the market will appreciate, and when there's a disappointment, market also. That is what we're seeing. Some number that came within those market economies, some of them are below expectation, which also drag some of the indicators down last like yesterday. But I believe that today all are looking well. I can see I told you earlier that the European market is in green across UK market. You can see all of them, Canada and all those. So you can see that all these are can see that even Germany, all markets are looking up there. It tells you that this expectation is all, and that also support the market. I believe that no, there's no cause for alarm at all in the market as we speak. But we believe that Hong Kong and what is happening in China also have a way of suppporting what the market, especially the oil market that also remain a bit stable as we speak now. Oil is trading around the 86 dollar per the 1 For me, it's still okay. Tells you that no stability, and despite we have seen that the movement of no ammunition or weapon from the Western world to Ukraine might likely also spark up another level of conflict. But I believe that also the leaders of this matter economy also should also weigh in also to see how they can make sure that this war also subside. But if they continue to bring their weapons and Russia continue to see going to be a global issue again. That means this year volatility that we're seeing will continue, even the oil market and also in the economy. That's why it's too early for us to conclude where we are going as the fear of recession, what is going to come, because if the war escalates to another level, that might also stop a lot of things. But I believe that with the wisdom of the leaders, they should know how to do, and also the two countries involved also know that sharing blood to also support what they are doing. I believe that for them to agree and come towards an agreement, and this also come put an end to what is happening in that domain. If that happens, that will also be a plus for the market. But as we speak, the global market is still in green. All the market abroad is in green. I told you earlier that that the European markets or stocks are in green. Also in US, for me, it's a good news for investors. Even the emerging market indicators are also looking up, or indices are looking up as we speak now. It tells that stocks are looking up. Even the 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 data we're expecting also, whether it will also fuel continue expectation of that Fed will continue to kind of hike rate or kind of adjust rate downward. Is this number that will determine. Also, don't forget that the last labor data also were missed. Concerning the one that we're expecting today, once it comes, it's also going to give a clear direction where Fed will be looking to in terms of rate hike and all that. These are the things we also want to look at the same time. That I believe that this also is part of what is also shaping the market as we speak. Yesterday we saw that Bank of Canada also had their meeting as was expected yesterday, and can see that their rate policy also for me was a bit not market didn't react much on it because it was not expected. All eyes are still more on what on that of Fed future date for the world for them to know the path. But for Canada, I think it's also the race was not too much, and for that, market didn't react more to it. But I believe that all eyes on this US to see their policy tightening direction to also guide what to come from there. These are the things that we should also note at this hour. But down here, I want to say that yes, at the any season is kicking off, I know that no trader or investor want to lose money, and that is why when the information came after Tuesday about adjustment in rate, then there was a lot of panic. But I'll tell you from what we saw yesterday, we might see a little change, and also because it's any season, we might not see much impact of the rate hike on this market, our equity market, especially if the company numbers we're expecting also beat expectation. I've seen their Q1, Q2 give us an insight to what's expected to continue in this regard. On that, we expect that this also continue to support the market as we speak. If that happens, that will be a good thing for the market. I believe for us, there's no time for us to panic, like I said. But this time, don't be greedy. I know that don't be emotional in your decision. When you have made profit, take your profit. Where you see that you have markup because using your technical analysis and the earnings date to position this time, you have to keep your eyes on the market because you are using these things to guide your position. Even when results come, it beats your expectation. You know what's the right step to take immediately so that it can go up as you speak. These are the things you should watch. Don't panic at all. Rather, hold your position because you expect the market also to move in the right direction because liquidity we saw that it was excess, in this fixed income market. We saw what happened, a lot of liquidity after the adjustment dance. There's still demand for that. This liquidity will also have to find its way to somewhere. I believe that the yield we are seeing in this market is what's going to guide us so that we know exactly what to do because I believe that these are the things should guide the market at any given time to let us know what to do as investor or what not to do. This also should guide us and know what we should do. I believe that as investors, we don't need to panic, but rather just hold our position and want to see what is happening, in the market. This is time for you to just, but in any season, all those numbers that you have focused on, just keep your eyes on them because I believe that they also coming to work to support this prices of this stock. Yes, before we go to the live chart, I want to look at the earnings that were released to the market yesterday and this morning to see how market going to react to them. We have seen consistent reaction to the one number that came from Unilever for straight 2 days. Just to know how impressive that number is and the level of liquidity in the market. I believe that since it's not a audited account with a corporate action, that's why we are seeing a slowdown. But that number has given insight what's likely to come out from Unilever. Especially these are companies that pay above that nearly pay all their that pay all their earnings as what as dividend, especially those companies that has a high, that have the foreign investor has the fifth, almost above 50% position for that. To believe that this also support that Unilever price. If you're in there, then you don't need to panic at all. Just for your position because I believe that everything work out well. Yes, we want to look at the one that came from Capri yesterday. We want to start from Capri, look at the one that came from Resta and also from Academic Press. The Academic Press and Resta are Q3 because these are match accounts. The only one we want to look at is the audited account, unaudited that came from Capri. This Capri number will tell you this number for me is still missed compared to what we saw in their Q1 and Q2. The full year result is not clear until you see the audited account. But when you match the audited account for 2021 with the one unaudited for this year, it also give you an insight what you expected. But if you look at the figure from Capri, I'll tell you that the revenue or the top line, whatever I call it, or turnover moved from 42.37 billion to 55.21 billion, but that's about 30% up, which is good. But if you look at the profit after tax, 449.71 million to 946.1 million, which is about 111, 110 or 11 up. Good one. But you can see a company that had about almost 55.21 billion. No, that means it's not that what have taken over all the profit, even the profit between is it cost of say, you can see all these are wiped away the bottom line. That's why every investment, you want to look at what is coming to you as investor because you want to see the bottom line because the top line is good, but when at the end you are not getting anything as what as investor in that company, it becomes a serious issue. But for us now, we can see that this 946.1 million translate to just 50 kobo any per share. And this is a company that have posted their Q3 more than almost 1 naira. But we are seeing full year down this one, which also come for question. We need to also look at that most subsequently to look at what is happening. But you can see that also profit margin also was up, but still very low to show the cost implication 1.03 to 1.72. You can see that the profit margin tells you that something is happening there because the cost of operation. I know that yes, cost of finance is up, but I tell you this one is still heavy. You need to look at it very well. Also, if you look at the company operating cash flow, it turned negative from a positive of 674, point, point, 2.2 million to 2.48 billion negative. You can see what is there. For me, we need to look at this number. And if you look at the last quarter, which is from October to December, I'll tell you that the negative position in terms of profit after tax deep in more further to a negative position, which also for me is a concern that also we need to address as investors and see. Because let's look at it very well. You see that the revenue for that last quarter, fourth quarter of the year, moved from 12.32 billion to 12.607 billion, marginally up for the quarter, and also the loss after tax now, grew from 682.9 million to 1.87 billion. You can see for this same quarter again, these are what also can reflect what at the full year. The loss is huge here. That can equally also affect what the company the bottom line at the end of the day. You can see or any per share at the end. That's why we need to very care when we're looking at this company number. It's very, very important at another given time. Yes, quickly look at what is happening in Resta. Resta result for me is a good number. This is their Q3. From here, you can get a clue what is likely to happen at the end of the day. We saw that in the number release, they grew their top line from 9.2 billion to 10.5 billion. That's about 14.4 percent up. In that same direction, this PAT moved from 210.23 million to 317.4 million. That's about 51% up in their PAT for Resta for Q3 because they match account. And also this translates to 33 kobo earning per share against 22 kobo posted in 2021. This is good for them. But I tell you, cost is really affecting most of the manufacturing now. This one is a Korean company, cost of transportation, but I can see that it's also eating deep there because their profit margin is just below, very, very low from 2.28 to 94% for mobile. This is very low. But the good thing that the operating cash flow is operating cash flow is in a positive position, looking up, which is good from 782 million to 1.33 billion for the period under review. For me, it's a good one for Red Star. The last one we're looking at is the academic press. Academic press, yes, I tell you this number is a missed number. But also the price, and you can see the impact of also the additional share when you give also bonus at times. That's the whole. But this number, I will tell you, is still not too. For me, it's a missed number, and also with the trend of the price is selling, that signals that post Fed being the third quarter of the company. Let's look at the top line. Top line was up by 19.2%, up for the top line from 2.75 billion to 3.28 billion. And PAT was flat or down negative marginally. The PAT stood at 134 million against 138.99 million in 2021. That give us a negative 3.6 or 3 or negative 4%. If you want to put it there approximately, that is the figure for the bottom line, down marginally. And also this led to also a decline in what in the EPS. That means they've not factored in the models they gave, because this was what was seeing a decline from 23 kobo to 22 kobo in the figure released, and that tells you that they've not factored in what the bonus they gave in their last financial year. And the profit margin also declined from 5.1% to 3.96% for the period. Operating cash flow improved for the period to 498.67 million from 210.17 million. Good one for the result. Like why we look at the cash flow? I said in this last, you want to know is the earnings of the company sustainable? Because if your earnings is looking up and don't have enough cash flow to support that, it's a matter of time your earnings will start looking down. That's why when you are looking at company results, after looking at the top line, bottom line, look after tax, yes, look at what the cash flow. It's probably further you can go and look at what for the quick ratio, looking at the strength of the balance sheet of the company. But I believe that for those that really want to take it on, this guide you to know exactly what to do. So that we that are dividend investors, we look at the earning per share. At the end of the day, what is coming is from there that what we pay to you will also be determined from there. From this position, I can see exactly that companies numbers we expect them to see a better number. For those that have seen a good trend in the previous quarters, for me, there's no cause for alarm. Let's keep our finger crossed and also watch the market as we. Yes, as we speak now, the market remains in green. That as it opened this morning, as we have seen that our market is trading, yes, within that same oscillating period, that oscillating trend, sorry, and side trending and or ranging, anything you call it. I tell you, the market is still, I'm not giving us a breakout. I believe that today we know before the market closed, but at this hour, market reversing the loss, marginal loss yesterday. It's also a good sign where the market is going. So speaking, the market is doing 52,724.70, up by 25.05 points, getting about 0.04% up. For me, it's a good one for the market. First light up, we know that. But if you look at market, market breadth is strongly positive. Was having a 10 gainers against 3 losers as we speak at this hour, which is good for the market. It tells you that these are the things we also look at to see where the market is going. If we are seeing such a gain, okay, now we're having about 12 against 6, 12 against 6 losers. Like I can see the six losers, you can see that the top gainers, losers are arrow to the scope is one losing about 8.70%, followed by linkage assurance, you can see Transcorp there, and Dangote Sugar and GT Gold. GT Gold is just little of losing 0.05, just about 0.2% down. I can see that the losing trend is still very small. Not this one is about. These are only two big stocks there, and now it's GT Gold and Dangote Sugar. I know that it won't last there. But if you look at the gainer side, that has 12 gainers as we speak at this hour. We're seeing our peak insurance top, which is the donation insurance now topping the chart, followed by Chalarat. You can also see Honeywell, see UPDC, and also we're also seeing no fixing. These are the top 5 gainers. Zenith Bank in that category gaining also at this hour. We have the 12 gainers and against the 6 as we speak now. It's a good one, but we won't forget to look at what the volume. The volume was also led by people. So trading around the 24.30, having a 8.8 sorry 8.75 million share traded so far, followed by Dangote Sugar 6.25 million share traded, and also mutual benefit. Zenith Bank 2.7 million share traded, then Unilever still at 13 naira 35 kobo to about 2.2 million shares. These are the stock in volume. I'll tell you that the market is gathering momentum gradually. We believe that the more we see the corporate action of this company at the end look good, that will also support the market. Like I said, yes, the market at this period, because this is the peak of the earnings season, we don't expect to see market going down much as anticipated earlier when there was a great hype, because none of, I think most, let me use that, none of the most of the analysts were not expecting the 100 basis point hike. It was a surprise, but I tell you the market is not reacting much because we are seeing a disconnection between the rate hike and what we are seeing in the main interest market, which is the fixed income market. Regarding the newspaper market to the market, we know that yes, it's a slap on the real economy, but for financial market, that will also trigger flow of funds. But from what we saw yesterday, you can see that we might also see funds remaining in the equity space, or even some funds also moving back to the equity space because of what the time frame for real dividend yield that we are all looking at, and that also support the market. For that, there's no cause for allow. Like I tell you, we want the market to make money, but we must also take away emotion, take away fear, and also take away greed. When you make profit, you know how to take profit, and also don't panic out. That's why you must know how to combine your technical and fundamental, which this class will continue to guide you at every time as we come on live. This class. Let's look at our live chart. Quick one. We need to call our indicators to look at what is happening in the market right away. Straight to our indicators for this class. I think by now you know them. Our money flow is very, very important. Our T line is very, very important. T line help you at all times in any market time frame to know what is happening, whether there's sell pressure or there's accumulation or there is what time for you to buy or to sell, and to watch the market. It will help you to work to take all this guide all decisions so that you know exactly what to do and in the market. Yes, let's call the last one. Today we want to look at the let's call the MACD up now. Look at MACD. Yeah, that's why it's a language because we need to look at MACD. Very, very important. Look at it this time. Yes. We're not clearing our chart, but you can use other things when you understand. You can see looking at the MACD and the C line and the money flow. I'll tell you that MACD before now, even like on Friday, MACD was a kind of a divergence. Even when the market is start trending, MACD are giving up, going on a bearish side. I would call it a bearish divergence because market is diverged. Why MACD is already coming down. But this morning we are seeing a reversal in money flow. But yesterday money flow have gone below, almost going down, around the before yesterday, sorry, when it was down almost around the 55.05. Yesterday we saw little improvement toward to 55.32. This morning, I see that money flow is already almost 60. Say that it's coming back. Say that funds are entering the market. You can see it here. Here, volume is not much, but you can see a green position. And we're looking at the volume here, but we believe that the volume yesterday and before was not too strong. But let's see, as our market is waiting for a trigger, but with numbers that are coming, we expect to see where the market will go from here. But from here, I can see that money flow is turning up again. And look at the chart on the weekly time frame. I see that, sorry, look at the chart on the weekly time frame. You know that the market is still strong. That's why on the daily chart, you need to look at other. Like I said, you can see that how strong the market is. You can see that MACD is very, very sharp, and you can see also the position of the market on the weekly chart. This is what you use to go. Multiple time frame will help you look at your C line and where the market is very, very strong. That's why I was seeing also kind of what we call a range market or sideways movement. but market is still above the T lines. Strongly, for me, it's a good one for the market. On the daily chart, on the weekly chart, market is still very, very strong. You can quickly check the monthly chart here so that that is the one can look at. You can see on the monthly chart, market is still very, very strong. Why I'm doing all this so that you look at what the market is. You look at also your your histogram here in MACD. That is also becoming bullish already on a long term, which is a 1 month time frame. For me, there's no cause for alarm. The market, let's wait at market like told yesterday and today we confirm the market. We can already see the light coming out will go until the end of the day, so where the market will close. And this also usher us into the last week of the month. And as we are coming closer to election, I expect to see a cautious trading. But those companies that you are putting for dividend, that will not stop them from bringing them. Especially for the early filers, we see them before the election. That will also give us a strength or a kind of where the market is going from there. That is the thing we should be expecting now. Like today now, we have seen the market already. We want to look at few stocks that before our time is but let's look at we have not looked at the market on a 1 hour chart. Let me quickly look at it. On a 1 hour chart, you can see that market is flat. It clearly came down below the T line, but now flat on the T line. You can see even money flow, it's also flat around 50, 55. But now MACD is almost becoming bullish on a 1 hour chart. These are the things that we also consider when we are taking your decision. It's very, very important. Let's quickly look at those stocks that on the general chart, the ones I know that yes, for Honeywell, we're expecting their third quarter result, but Honeywell is in green. I told you earlier this morning. Let's quickly look at what is happening in UPDC. Again, the strength we are seeing, is it sustainable? Let's look at that. UPDC. Look at what is happening there. Quick one. Then look at what is happening in GT code and what and fixing. Want to look at this is the 1 hour chart for the stock. The 1 hour chart can see trading below the T line and 1 hour chart can see it here. But MACD is then giving us a sign of what bullish mark for 1 hour for the stock. You can see below the T line. So now go and check the day chart, how it looks like on the day chart. That will tell us. When you check that day chart, you can see it's almost crossing what the T line. Once that is more strength for the stock. Also, we can see what MACD is. The MACD also giving us a sign of the stock becoming bullish, almost crossing the red one. But money flow is relatively low, around the 28. Once it crosses 50, that's a brand new strength. You can see where the MACD is now. For me, it's a good sign. And let's see how far to go. Yes, some more things are flat on the T line. Once it crosses it finally, that was a good sign for the stock. Fine, let's look at fixing healthcare. Fixing healthcare. Fixing healthcare is in green. We can see that MACD the still flat on the T line. We can see that we are seeing a red candle here. Sell pressure. We can see the stock is doing around there. We are touched 975 today, but as we speak now, it's around 951. Above T above the T line, trading above the T line slightly or on top of T line. Money flow is still looking up around 49.48. Once it cross 50, that's a good sign. But if you look at the MACD here, this is a bullish signal we're already seeing. This bullish signal very bullish. Once it cross, you can see it almost crossed. And once it cross the red one up here, that's a good sign for it. And this is what for a day chart. Let's look at the weekly chart for the stock, what we are seeing on the weekly chart also. Weekly chart, you can see that it's still very strong where it is. Stock T line, MACD, money flow is looking up above 63. For me, it's a good one. And MACD is already bullish on the weekly chart. Let's keep our finger crossed on this stock because I see potential in them. Finally, let's look at the GT code. Say GT code, let's look at that stock. Let's look at GT code. That will be final for today because of our time. Let's look at it. See, but good at the market is GT code. I will tell you on the weekly chart, it's still very, very strong. For those that are there, hold your position. That's why we're seeing slow down money flow. MACD is bullish on the weekly chart. The trend above the world is see that. Quick one today, look at the daily chart and 1 hour for quality. For the daily chart, still slightly above the T line, has not trade below the T line today. You can see it here, it's a good sign. And money flow is flat at 61. For me, it's a good one, but MACD is also try to come up again. Here it is bearish now, but we are seeing a sign. Looking at the histogram here, try to also come up to what to turn green. That to support. Particularly now that the number, we expect to see the number in this month of February. The month of February that will enter by next week. There's no cause for alarm. If you are in this stock, unless you are hit your target in terms of profit, like I tell you, this kind of market, don't be fearful, don't be greedy, and also take away emotion because you will allow your strategy, and your plan to guide you by trading your plan in this kind of market. The volatility will continue, but I believe that our eyes will not move away from what our charts. Yes, fundamental will be there. We want to look at what is the psychology of the people, what is their behavior is very, very important. Yes, this note I say thank you. See you tomorrow and enjoy your work for the rest of your trading day.